Learning accounting and financial statements might be scary, especially if you don't have the right framework in learning them. You might be missing important information needed to understand your financials. Learning accounting is a must if you want to go start a business or grow it. If that's something you want to do, then you are in the right place. So for today, I'm going to discuss terms in financial reports. Welcome to the Digital Transformation Academy. My name is Dennis Hilario and I'm here to help you in your digital transformation journey. Let the show begin. Hey, today's Friday morning, November 20, 2020. My name is Dennis Hilario and I want to welcome you to the Digital Transformation Academy podcast. But before the main topic, I want to share my morning routine where I greet my dogs and feed them and then do a functional workout. Today, while working out, I was listening to Joe Rogan's podcast interview with Dave Chappelle, and it's very entertaining. You guys want to check it out? It's actually my way of sadly coping up after our recent loss or recent passing of my father due to heart attack about 2 weeks ago. Rest in peace, tatay. So life is short, man. We gotta take care of our health and watch what we eat. Anyway, hey, if you're new here, I want to let you know that I release new episode every Mondays, Wednesdays, and Fridays. And please consider subscribing by hitting subscribe and like button in whatever platform you are consuming this content. We are in the part 3 in the basic accounting terms. Oh gosh, I'm so excited in these following topics about financial reports and understanding the balance sheet, income statement, and whatnot. So let's start with the balance sheet. So what is balance sheet? It's a financial report that summarizes a company's financial position, whether it's an asset or when you say asset, it is what you own. Liabilities, which is what the company owes. And the owner or shareholder equity, which is your basically net worth. Now, when you read the balance sheet, it has to be in a particular given time. Are you reading it at the end of last month? Or are you reading it at the current month, which is November 2020? Something like that. No? To explain further the components of a balance sheet, let's talk about asset. So asset is an economic resource that is expected to be of benefit in the future. Examples are current assets such as cash, accounts receivables, inventory, and whatnot. While non-current assets are the fixed assets. These are long-term and will likely provide benefits to a company for more than a year, such as real estate, land, or major machinery. So next component of a balance sheet is the liability. So it is a debt or obligations owed by one entity, which is the debtor, to another entity, which is the creditor, payable in money, goods, or services. Examples of liabilities are accounts payable, notes payable, loans payable, and salary payable. So now the third component of a balance sheet is the equity, or owner's equity. It's actually the residual interest in the assets of an entity that remains after deducting the liabilities. So basically, it's the net worth. So in the equity, it shows the capital stock, which is the initial capital or paid up capital of the company. And then it's retained earnings. So retained earnings, on the other hand, is the accumulated income or loss of the company from the time the company started. So in summary, the balance sheet is your financial position. So it shows what you have and what you owe, and it shows if you are liquid or if the company has large debts and whatnot. So now let's talk about the next financial report, which is the income statement, or sometimes called the profit and loss or statement of comprehensive income. So it is the summary of the effect of revenues less the expenses over a period of time. So a period of time is referring to the current month, the current quarter, the last quarter, or the current year, or the previous year. So for example, if you have a revenue of 100,000 for the month of November, then you less your cost of goods sold and your expenses, say roughly about 70,000. So now your net income would be 30,000. So now let's talk about the components of the income statement. One is the revenue, which is the top line row in your income statement. So the revenue is the income generated from your normal business operations, and it may include discounts and deductions for returned merchandise, but it is the top line, like I said, or gross income figure from which costs are subtracted to determine your net income. Now, the next component or row of your income statement is your cost of goods sold or direct cost. So it's a figure representing the cost of buying the raw materials and producing your finished goods after selling your goods. Now, if you are a service company, then you may call it as cost of services. So these are the direct labor or direct manpower that you paid for in exchange of the services. So that is basically your cost of goods sold or cost of services. Or sometimes they call it direct cost. So now, if you subtract your direct cost of goods sold from the revenue, it is now called your gross profit. So a gross profit is the profit that the company makes after deducting the costs or direct costs associated with making and selling your products. So in Tagalog, it's called your puhunan. No? So after the gross profit, the typical income statement now shows your operating expenses. So an operating expense is an expense a business incurs through its normal business operations. So this is sometimes called your overhead or your administrative expenses. Actually, it's abbreviated as OPEX. So the operating expenses include the rent, your marketing expenses, your insurance expenses, some funds allocated for research and development. So one of the typical responsibilities that the management must contend, which is determining how to reduce operating expenses without significantly affecting a firm's ability to compete with its competitors. So let's now talk about EBITDA. So EBITDA is the acronym for earnings before interest, taxes, depreciation, and amortization. It is a measure of companies' overall financial performance. So after deducting cost of goods sold and operating expenses from your top line or your revenue, that is called your EBITDA. So now the final component of your income statement is your net income, or sometimes called net profit or net earnings. So it is calculated as your top revenue minus your cost of goods sold minus your selling expenses, general expenses, administrative expenses, depreciation, interest, and all the expenses of the company. So it is useful for investors to assess how much revenue exceeds the expenses of your organization. So this number appears on a company's income statement, and it is also an indicator of your company's profitability. So if your net income for the year is negative, so obviously it's a loss. But if it's positive, that can be a surplus of your company and then carried forward as your retained earnings the following year. So the third financial statement that the company prepares at the end of the year is your statement of cash flow or a cash flow statement. So it is a financial statement that shows how changes in the balance sheet accounts and income affect cash and its cash equivalents. So it breaks the analysis down to operating, investing, and financing activities. So essentially, the cash flow statement is concerned with the flow of cash in and cash out of the business, and it shows its short-term viability to pay bills and pay its working capital requirement. So that is it for now. Question of the day. How frequent do you review your financials? Is it monthly? Is it quarterly, daily, or yearly? Please share your insights in the comment section. And hey, if you got a little bit of extra time today, make sure to rate and review this podcast and let us know what has been your favorite episode so far. And if you haven't listened to the part 1 or part 2 yet, I highly recommend to listen to them and stay tuned for next week as I'm going to introduce you to new topics or new exciting topics such as government compliance, accounting processes, down to the most exciting part, the accounting digital transformation. I can't wait to share this to you in the next episode. And thank you so much for listening to this podcast. It means so much to me. And I want to applaud you for taking the time and being part of this community. Oh, please check out our Digital Transformation Community FB group. Links in the below section. And throw in all your questions in the group. So thank you so much. And I will catch you in the next episode. DX Your Life and Business. Have a great day.